BloombergQuint. Last 1 year hasn't been easy for the auto industry. On one hand, it grappled with pandemic-led disruptions or shutdowns here and there. On the other hand, it also had to make through of the chip shortage, which really curtailed the industry's ability to meet the rising demand as push to personal mobility gathers pace in the country. Now, to put things into perspective, joining me is Shashank Srivastava. He's a senior executive director for India's largest car maker, Maruti Suzuki India Limited. To talk more about this, what the year gone by and what lies ahead for the auto industry. Mr. Shashank, it's always great to have you with us. Thank you for your time.
Thank you. Thank you for having me.
Quickly sum up the year gone by.
Yes, for the industry. Yeah, so for industry, if you compare with last year, it's been positive. Despite the semiconductor shortages that you just mentioned, the overall industry growth is 13.2%. So the volumes have touched 30.69 lakh against 27.11 lakh, which we saw last year. So when you compare with last year, it looks quite good. However, a caution, if you compare with 5 years earlier, we had exactly the same numbers, which was about 30 lakh, 40,000 or 47,000, that range. So when you compare with last year, it looks really good. But if you see it in a longer term perspective, we need to look at it with some caution. But overall, I would say demand has been pretty strong throughout the year. It's the supply situation which has been a matter of concern.
Right. So where are we? Where do we go from here on? Looks like the worries which we saw last year as well seems to be coming back with the lockdown in China. What happened with Russia and Ukraine? What do you think? How the supply and everything will pan out in the coming quarters or months?
Yeah, so actually the demand for next year in the industry, there seems to be a consensus, will be roughly in that range of about 33.6 to 35.2 lakhs for passenger vehicles. So that's a positive because that indicates about 13 to 15% growth. However, there are 6 challenges which have been identified by the industry as possible spoilers, you can say, or at least something which you need to overcome. One of them is the situation regarding COVID. You could see another wave, and that can disrupt not only the retail side but also the supply side. That's one. Second is, of course, the interest rates, which may go up in response to increasing inflation rates, and that could affect the liquidity and also the retail rates. Auto industry, as you know, 80% of the retail happens through finance. Third is the rising fuel prices, which affects almost everything, including the consumer sentiment as regards cost of running. Fourth is the commodity prices, which have been rising, and that could reflect in increased prices for the consumers, the cost of acquisition itself, not just the costs of running. The high commodity prices are the reason, or the increase in some because of government regulation. You could see an increase in the cost of acquisition also. So there are a lot of challenges, and but overall, I could say it's quite optimistic, considering that the auto demand is very closely related to the industry, to the economy growth, and that seems to be positive. That's looking positive at the moment. So optimism with caution.
How has been the last couple of months for you, really, in terms of? I mean, I'll bring back the point of the challenges of what's happening in the logistics supply chain has also slowed down. Availability of parts has come down. Lockdown in China. Are you already feeling the pinch? There was already, but where are we right now?
Yeah, so at the moment, if you compare with September, which is 6 months back, the things are actually better. So in September, we had just about 40% of our production, planned production. In October, it was about 60%. November, it was about 83%. December, it was about 90%. January, 92%. February and March, 95%. So it's got better. However, it's not got to 100%. And looking at the next quarter also, it does not seem to be 100%. And the next obvious question that people ask is when it will be 100%. And that's an answer which we are not able to give because of the complexity of the supply chain which is involved. It's global, and it's not just Maruti Suzuki, but and India, but all OEMs across the globe have been affected by this. So 100% normalcy, I don't know when it would come, and therefore the visibility of availability situation is still not there. And that's why it's very difficult to predict the exact numbers going forward.
Do you expect the productions to go down? I think I'll repeat the question again.
Yeah. So actually, I don't know. As I said, the visibility.
Let's put the question again. Do you expect the production to go down going ahead because of what's happening in China?
I'm saying it. I can't answer that question because the visibility is not there. So we have to study and see how. And it is, the thing is coming. Situation is changing every few days. So really, long-term projection from this point of time is very, very difficult to make. I'm afraid, Nishant.
Right. You mentioned raw material, rising input costs.
Yeah.
How has that been impacting your margins? How much have you been able to pass on to the customers, and do you expect further price hike going ahead?
Yeah. So surely, as you know, Nishant, in any auto OEM, in a cost structure, about 75 to 78%, cost is related to material cost, and any changes in commodity prices obviously impacts big time the overall cost structure. And we have seen in the last 1.5 years, the commodity prices have increased manyfold. So whether you look at steel, which used to be at 38,000 a ton, now upward of 75,000, 80,000. You have aluminum coming up to almost $4,000. You have copper upwards of $10,000. Plastics have gone up. So there is a very big impact on profitability. And so far, if you look at the last price hikes which we have taken, we have undertaken 4 price hikes since January of last year. The cumulative increase has been about 8.8%. But that's not sufficient to cover the entire cost impact because of commodity increase. And that is the reason why the profitability would be under pressure. But remember, we have to walk that fine line between the top line and the bottom line. We can't really just pass on all costs to the consumer because that adversely impacts the volume. But on the other hand, we can't just look only at the volumes and not look at the profitability. So it's a very fine line. And at the moment, we are watching the situation very closely, and we will be taking a decision soon, and we will definitely let all of you know about that decision.
How much you have to absorb?
Of course, it's something which I am maybe the finance guys are the best people to reply to that. The different models obviously are affected differently and as you know, we operate a very large portfolio, so can't really give a one number. But yes, the effect has been because of various reasons. Commodity prices have remained very high, and the expected softening hasn't happened because of global situation.
Right. So, wait and watch for what lies ahead in terms of raw material costs.
Yeah, looks like.
Give me a sense of the kind of launches lined up for the next year. Demand is surely not a question. What's happening from the launches perspective?
Yeah, so while I cannot give you the exact timelines or the models, we recently launched this new Celerio, the new Baleno, the upgraded WagonR, and we have a very good plan going forward for upgrading and also expanding our portfolio. I've been saying that if you look at the market share, if you remove the SUVs, then the market share for Maruti Suzuki this year has been a record high at 66%. But SUV is some area where we haven't really done well, and that pulls down our market share a little bit. And that is one area which we are looking at strengthening going forward. We have only 2 models in that SUV segment of the 46 which are there in the industry. So surely there is, if we want to maintain a high market share, we need to focus on that segment to strengthen, and we will be doing that going forward.
Right. So at least, launches in the SUV space, you're not going to give out the number, how many launches are lined up?
Yeah, so as I said, timelines and the launches is something difficult for me.
And you mentioned also, rising fuel prices is also one of the deterrent, is going to be one of the challenges going ahead. Gadkari, I think, a few days ago, was quoted in the media saying that in 2 years' time, petrol prices and EV prices are going to be almost at the same levels. Now, you do not have an EV product right now, but you did have announced your plans of this investment and everything. Do you think still you're late to the party, and you want to give out some timelines on when we can expect the product rollout?
Actually, we have this year, if you see the sale for EVs in the industry would be roughly about 15,000 number. in the passenger vehicles, and that's about 0.42% of the overall sales. So as a percentage of sales, still small. So the party is not large enough at the moment. There are some constraints to this party getting bigger, and one of the constraints is cost of acquisition, because of the battery costs, which are quite high, and also the charging infrastructure, which is still in a very nascent stage in our country. So there are challenges, but there seems to be consensus in the industry going forward. The lower emission vehicles will be given primacy by the governments across the globe. And what is not in consensus is when will that point of inflection be reached, when suddenly you will see a large scale adoption of EV. And the general projections seem to be, including from Bloomberg, is about 8 to 10% for passenger vehicles in 2028, 2029. So, of course, you have a large number of vehicles being produced by that time, almost 70 million in the Indian industry. So even if you remove 10%, 63 million cars would still be ICE, and you need to do something about it. And we believe CNG and hybrids are a very good option for that segment.
Appreciate your time. Wishing you all the best.
Thank you, Nishant.
Days ahead, and always pleasure speaking with you, sir.
Thank you. Pleasure talking to you. Thank you.